Michael Kokalari, Happy New Year.
Happy New Year.
Yeah, we're into 2026 already. So this is an update of the December fact sheet for the VOF fund. But I think it's to start the year off, it's quite important for us to have a conversation on where we're looking ahead. But before we do that, we're going to have a reflection on what happened in 2025. And Mike, 2025, Vietnam stock market, really strong performance. However, within that is sort of a tale of two halves. So the first half, when we had a lot of the volatility, uncertainty around the tariffs, market was up 7%. The second half, where perhaps some of these policy and reform changes rapidly were implemented, we saw the stock market up 30%. So for the calendar year, stock market Vietnam above 39% strongest performers in the region, if not globally. However, our performance didn't meet that, and it's been a difficult year to come out with an increase in our NAV of about 7% only. Again, the first half of the year, similar to what happened with the wider stock market, we saw a contraction in the NAV that was also compounded by some final and further write-downs in one of the investments in the private equity portfolio. The second half of the year, however, with several restructuring efforts we'll go through briefly, that saw the NAV increase about 13% in the second half of the calendar year. So overall, VOF over the full year up about 7%. Now, what drove the stock market performance and what drove that deviation with our performance is very much has been concentrated around this story of the Vin Group of companies. And if you think about the US, they've had similar dynamics of the Magnificent Seven. You've had a situation where it's a very narrow group. It's been a very concentrated rally, and that which has sort of persisted.
Except this is the Mag 1.
Yeah, it is the Mag 1.
In my 30-year career of doing this job, I've never seen a situation like this before, where it's just everything is concentrated in like one or two names.
Right, and that therefore, Vin Group up about 700% last year, a phenomenal run. Now, we don't hold Vin Group, and there's several reasons why we don't hold it. We've explained this before, but in a nutshell, how we access this Vin Group is in Vin Homes, which is the largest real estate developer in the country. We've held this name for about 7-8 years now. Last year, Vin Homes was up 200%. We were able to benefit from that in the portfolio. Vin Group, on the other hand, it's a conglomerate. It's a conglomerate. There's many things, including an electric vehicle. A lot has been written about that.
That it's lost $10 billion.
That's lost $10 billion into developing this electric vehicle company. The valuation is not cheap. I mean, it's trading at like 70 times PE. Whereas if you look at the wider market of Vietnam, we're trading about 13 times only. Now, Vin Group has very much been a stock that has driven that performance. If you think about the index performance last 39%, if you strip out Vin Group, the index performance is only about 9.5% only, right? So again, that dynamic is, we think, an exception for the wider market. What we focus on, is having a portfolio that accesses the broad economic environment. And it's been a year where having the breadth of holdings has actually been a bit of a hindrance to our performance. Within the performance issues, aside from not holding Vin Group, several of our quality companies that we've held for many years have been a bit of a drag. They're low beta, high quality companies. Companies like ACB, which is one of the leading commercial banks, Airports Corporation Vietnam, the monopoly airport operator, FPT, the technology company. These have been good earners and compounders in portfolios in recent years. However, this year, some of those returns, I beg your pardon, given back. FPT.
Just because of a few quirky things that came up.
Right.
Idiosyncratic for each name.
Right. So that being said, though, we've done a lot of portfolio restructuring activity. A lot of that's come through in the second half of the calendar year, and in particular in the last quarter. We've done a lot of activities, for example, around trimming or exiting names like ACB. ACV, we've now actually almost fully exited that position now after having a very good holding period, about 8 years, given returns of about 20% IRR. We fully exited that. There have been other opportunities where we've entered in and we've exited pretty quickly as well because the price has rallied for certain dynamics. SSI is a great example. It's a securities company. We entered into there just as we saw a rally in the wider market, but specifically as liquidity and volumes around the stock market increased. SSI was able to benefit from that, a great franchise, very strong ROE, but that stock was up 40+% in sort of the 3-month holding period. Our discipline is using to invest into that. We've subsequently rotated, and in the last quarter of the year, not only do we add to the public equity portfolio, bought about $80 million to names like Gemodet, which is the leading port operator, and we'll talk a little bit about the tariffs and all the non-issues around that. Mobile World, which is the leading retail company in the market. They do ITC, but importantly, they have this growing and very strong contribution from their modern trade business,
right? Grocery
business. Thank you. And then we've also added into additional names that have come through either private placement or pre-IPO. Techcombank Securities is the sort of one of the first IPOs in the market we've seen in about 8 years. It's been a successful investment for us. Positions up about 10-15%. We've also invested at the end of last year into Gelix Infrastructure's pre-IPO of one of their subsidiaries. That's going to IPO in February next year. Again, sort of our being able to access this is quite unique. Not many other investors were able to invest into that. And I think as we will update our investors as this thing lists into February on how that performance is going. Finally, just this week, we're the second week into the calendar year. Just this week, we've put in another $20 million into a private placement into one of the leading financial sector players. Again, that is going to be announced by the SEC shortly, and we'll come out to investors to talk more about that. So a lot of portfolio restructuring activities, and that's sort of contributed to that narrowing of the gap in performance in the second half. And I think that will continue to project out into this year. And as I said, we've seen, more importantly, a broader recovery in the market. Mike, I'm going to turn to you. I've done a bit of talking here already, but last year, some of those themes around promoting the private sector through some of the decrees. We've started this year with further decrees that is promoting the SOE companies, state-owned companies, and the public sector. Talk to us a little bit about that.
So I think, last year there was a sense that the government was really pushing on the gas pedal hard, to stimulate the economy, stimulate the market. This focus on, you mentioned or alluded to, the Resolution 68, that was the thing that helped push up the Vin Group shares so much. Towards the end of the year, there was a growing sense among the policymakers, and kudos to them for being proactive, that maybe we should go for a little bit more calm, stable type setup for this year, 2026. So you saw them, as you just mentioned, talking about, don't forget about the SOEs in addition to the private sector, talking about, hey, last year credit growth was like almost 20%. Maybe we should target credit growth something closer to 15, 16%, because in the middle of December, we had a situation in which the currency was significantly depreciating. There was some dislocations going on in the interbank market where banks lend to each other. Interest rates peaked to around 10% at some point. So there was more of a, the policymakers in EM, they always face the growth versus stability trade-off. And coming into this year, the focus is clearly more on stability. And we'll see how long that lasts.
Look, and I think it's only fair that we see a broader recovery and a broader that broader story is accessing, right.
But I think by the middle of the year, after let's say we have a period of relative stability for several months, and it's kind of difficult to have very stable and also high growth. I think by the middle of the year, they'll start pushing on the gas pedal again. That's what I expect.
And Mike, I was going to end this conversation talking about the GDP growth, but I think this is a good segue. Last year, Vietnam GDP growth up 8%. What's your forecast for 2020?
Yeah, I think 8% again. If you look at it as a kind of a stew of different ingredients, the ingredients will be a little bit different. Last year, it really was about exports to the U.S. and Chinese tourist arrivals. We expect both of those to normalize this year. And the big thing that I think will happen this year is that you'll see a recovery of domestic consumption. That's spending by local Vietnamese consumers. Last year, the spending by local Vietnamese consumers probably only grew around 5%. Long story short, households depleted their savings during COVID. By the middle of this year, 2026, they will have been, their incomes are growing at a 6 or 7% pace, and they will have had enough time to add saving at a very high elevated rate to have rebuilt some of their savings. And I think you'll see probably from the middle of this year, consumer companies should start picking up again.
Yeah, and along that theme, Mike, of course, the recovery of the consumer sector is a bit more protracted. Within our portfolio, consumer staples and discretionary makes about 16%. We've been building up our position in mobile world over the past 12 months. If investors look into our fact sheet now, mobile world is a top 10 holding.
Yep.
And again, a stock that has actually done very well last year, up at almost 50%. We're thinking this year that we're going to see a strong performance there.
And a great company, by the way, in terms of management. And
Absolutely, absolutely. So looking beyond, so within the consumer sector, where with the markets where they are today, valuations are increasing a little bit.
Yeah.
But the earnings growth is evident.
Yeah, it's still below 1 times PEG ratio,
Right.
called around 13 times PE versus maybe 17% EPS growth. Yeah.
And then versus our portfolio, our portfolio PE base is about 10 times so lower or cheaper than the market.
Yeah.
But in terms of earnings growth, we're thinking about 16 to 18 times earnings growth for this year. Our portfolio is delivering over 25% earnings
Wow,
growth.
that's great.
So again, that PEG ratio below 1 dynamic still persists. Within our portfolio, though, we've seen some rotation. As I said earlier, we've been trimming some of our holdings. Real estate, though, has been a mixed bag. So we've seen a very strong performance in Vin Homes,
Right.
in terms of certainly share price performance. It's a good company, right? It's delivered last year, we think about $1.5 billion in NPAT, in profits. This year, again, we certainly see growth on that number. One of the smaller real estate companies, Khanh Vu Homes, it's the number one sort of landed property developer here in the south here in Vietnam. They've been a long-term holding portfolio. They're out today now number one position. Their share price sort of didn't perform as well as the market. There's a bit of a dislocation there. Yet the fundamental story remains very robust. In terms of its fundamentals, things like debt to equity still below the market average. It's about 0.5 times. The sector average is about 0.7 times. Last year they delivered, say, $40 million in profit. They just announced earlier this week. We went to the update with the company. They're announcing that they're going to potentially deliver up to $80 million in profit. So over a doubling of profitability in this year. That's going to come from one, the launching of and the continued expansion of the new Gladia site, which they started to sell last year. That's going to contribute probably, say, 2/3 of that profit this year. And then the other 1/3 is going to come from existing projects in their inventory that they're going to release. Because, Mike, we talked this dynamic. There's still demand.
Oh, the demand for units outstrips supply by a factor of almost 2 to 1. And I mean, for KDH in particular, they're just really in that sweet spot where the landed properties that, Asians love to own some tangible land. But usually that's something that's only for like very rich people. They're doing it for middle class people. It's a great sweet spot in the market to be in,
Absolutely. And then if you think about our second largest holding portfolio, and we'll segue now to the material sector. Material sectors also makes up about 15% of our portfolio. Now, within that, Hoa Phat Group, leading steel company in the market, decent share price performance last year, up 20% almost. How are they going to be benefiting from this?
Well, infrastructure first and foremost, infrastructure spending last year by the government was up more than 40%, but construction spending was only up around 9%. So that means there's a still big pool of money that has yet to come into the market. And of course, with HPG, what we've seen, you guys have held it like forever, so you've seen this dynamic over and over, is that when they double their capacity, the share price goes up, and they're basically in the middle of another huge capacity increase.
Absolutely.
Very predictable pattern for that stock.
Yeah, and they're the leading real steel company in the country, over 35% market share. They're playing not only.
By the way, think about that for a second. 35% market share for the biggest steel company. That means they have an enormous amount of consolidation yet to happen, and that's why that dynamic of increasing the capacity, that's another 10-year type story. I think.
Yeah, and
Sorry
no, not at all.
Yeah.
It is, this is a company we don't talk enough about. They have they're vertically integrated, so they have a very good control of margins, and the margins that they can deliver, a little bit more than the other peers, but that sort of accretes and compounds over time, and that sort of has contributed why they're the leading steel company. The second thing is that this real estate recovery that we saw last year continues, so they provide steel to that. And now on top of that, they've got this infrastructure spending, public spending. You look out in Ho Chi Minh City, which is in the background to us today, you're seeing ring roads and toll roads, bridges being built, ports being built. So again, Huafa is a direct beneficiary as they supply to that. Looking further down the portfolio, some movements in the banking sector. I said Asia Commercial Bank was at one time a leading number one position in the portfolio. They've dropped down to number 3 now. In terms of share price performance last year, up about 11%. But that has been because we've been rotating into some high quality, high beta banks like CTG, Vietnam Bank. Is now number 4 holding in our portfolio. I mean, that is a bank that we added to last year to the portfolio, continue to add. That's up almost 40% the stock.
And they've given a pretty clear sign the last couple of days that they're going to focus in on infrastructure lending. So that will be fabulous for them.
Absolutely. And they've also guided that this year, similarly, they're going to see probably similar levels of earnings growth for 2025, one of the strongest in the sector there. And also MB Bank. MB Bank has been a name that we've also added last year as we exited a long-term holding in OCB Bank. We rotated that into MB Bank. MB Bank was up last year over 50, almost 55% last year. So this banking portfolio and banking names in our portfolio have done well, and we think that this year the platform still is for them to continue to do well. And then, let's talk a bit about FPT, right? FPT has been a name that's sort of added up about 200% since we've held it over the 7 years. This year, down, 26%, right? I mean, the dynamic there has been partly around,
it all started with DeepSeek.
It all started with DeepSeek. And I think that...
They're in a complicated position because, they are the leading outsourcer and they have fabulous relationships in Japan. What's happening with the AI stuff, this is not just like a FPT type thing. This is all the outsourcers. You've seen, I think it was Infosys that's tied up with some AI, so they're all struggling with, is the AI stuff going to cut into our bread and butter business of doing simple outsourcing, or does it present an opportunity for us to, rocket the productivity of our engineers? This is something that all the outsourcers are struggling with.
Yeah, and perhaps you would argue the FPT last year gave back some of the gains that were made in recent years. But we're still very much in the early innings of this, right? And we'll see how it holds. They will still form a core part of our portfolio. But certainly, within the top 10 holdings as today. And then on the private side, just to round off our top 10 holdings, Tilkup Hospital is the private hospital system in the north. If you recall, last year we divested one of our hospital platforms down south, Tumtree Medical. That was been a holding for about 6-7 years now. And we were able to exit at a positive IRR. If you recall, it was an investment where we started with 4 hospitals. We rolled on and bolted on and grew that portfolio to 8 hospitals, exited to a financial investor, and we're looking to reinvest. So,
and he wants to get into the nursing home business, so maybe we should talk to him
about
reinvest.
One of these things that's in Vietnam is that we are an economy at present benefiting from this tremendous demographic tailwind.
But at some point it's gonna.
So look, Mike, just to round off this great update for the year, a couple of things. One is we're going to spend the next couple of weeks with our sector heads in our team. So the 4 sector heads around financials, real estate, consumers, and industrials. They're going to come on and sit with us to give their views of what's looking ahead for the 2026. But Mike, what's looking ahead? I mean, I asked you about the GDP. How do you want to round off our conversation for the year ahead?
Yeah, I think, and I alluded to it a little bit already, that the government always faces this growth versus stability trade-off, and things were getting a bit heaty at the end of last year. So I think what you should expect is more stable conditions for the first part of this year, and then we start to see things really picking up again, both for consumers. I mentioned the savings accumulation, but also I think you'll see government policy stepping on the gas pedal around the middle of the year.
Yeah,
So.
and then for our portfolio itself, last year was a year that we did a lot of restructuring around some of the private equity holdings that have been in problems. Those recoveries are beginning to manifest. So we're going to look to update our shareholders in the first half of this year as liquidity events happen, as we recover money from those investments. I think more important though is that last year we sold about $420 million US. We reinvested into the portfolio about $300 million. We've returned capital to investors to the tune of about $120+ million, buybacks and dividends. I think that dynamic is going to continue this year. We'll continue to be there with the discount management in terms of buybacks. We're very conscious that our discount has widened. We need to re-rate that and narrow that. But I think importantly, the portfolio performance and what we've done in the portfolio, that activity is going to show through much clearer now in terms of performance to the overall portfolio, and then within that, some individual names in there. So thank you for listening to us. A bit of a longer update to the start of the year, but looking forward to coming back to you. It's going to be a profitable year, and certainly that's going to manifest itself in the portfolio. Mike, thank you again.
Thanks for having me.
And to our investors, stay invested and all the best for 2026.